Hello, everyone. Today I'd like to walk you through and give you an update of what we're doing at Osisko Metals, focused on zinc in the east and Bathurst and also at Pine Point. You can see here that last year in the last 18 months, it'll be 2 years in February, we put out two main mineral resource reports. One in Pine Point, which is a former producing mine. It was Canada's most profitable zinc mine for 25 years, between 64 and 88. And the remaining historical resources that were left there, they had mined for 25 years, 10% plus, but there was 6% lead plus zinc resources, historical resources remaining. We converted that within 10 months to 38.4 at 6.6 zinc equivalent, about 5.5 pounds of zinc and lead combined in the ground. And then we did similar in and around Bathurst, where Noranda was active for decades. I've worked there with them. Two deposits, actually three deposits put together. We have another billion pounds that are in the ground. So it adds up to about 5.8 million tons when you combine all the numbers at about 8.3%. So Bathurst is more of an underground scenario, so it has to be higher grade. But as you'll see, the 6.6 zinc equivalent of Pine Point is very high grade and shallow. The zinc fundamentals remain strong. You can see here, this is North American concentrate, and we really see a window of opportunity in 2023. If I get through the whole deck, I'm going to go into the historical zinc prices and how they've presented themselves and the opportunity ahead. We're aiming for 2023 to push this project as fast as is possible to be there to meet that supply drop and the corresponding price hike that would come with it. Whoops. So at Pine Point, we started in Bathurst. All the infrastructure is there. Great upside exploration potential in Bathurst alone. And we were being asked to review several projects. We went through, Killian Charles here, who's here with me today, we went through about over 100 projects. And we had to come up with some strong filters. And that was infrastructure, metallurgy, and exploration upside. And in Pine Point, we found everything in spades. All the infrastructure is there. There's power, hydroelectric power. The railway was built from Edmonton to Pine Point back in the 60s by CN for that project. They also built a power dam called Tulston that was built for Pine Point. It's still there today, supplying power locally to the Great Great Slave Lake. Historically, we knew that the metallurgy, the flotation, conventional flotation is excellent. Back at Noranda and Brunswick number 12, we always tried to be between 80-85% recovery. Here it's 85 to 95. The concentrate grades are exceptional. They're up into the 60s for zinc and up to 70 for lead. So very high grade, but as you'll see, there's even more quality characteristics on the concentrate, and that's why we call it a premium high-grade concentrate. We'll talk about that. 60 kilometers by 15 kilometers of exploration area that we would like to follow up on. We've just announced a couple of collaboration agreements and doubled our footprint. The claims are pending, but now we have much more room to grow and explore, and our objective is to get this 38 million tons to 50 million tons this year. So we're looking into that. This was the resource split that came out last year. There's from east to west, that's 60 kilometers. And then you can see in light gray the different bands of claims that we had. We've doubled our footprint and we've connected those two bands of claims and surrounded them where needed. And so now as I said, we've doubled the footprint. In red, you see the whittled pits from the resource of last year. There's about 40 pits in the MRE. So remembering Cominco days, 64 million tons above 10%, they mined it out of 50 pits, 50. We're going to have about 40. They're all shallow. The deepest would be 125 in that north zone, central zone, 125 order of magnitude. And then west of that Buffalo River, that would be more underground resources. You'll see why it's actually dipping shallowly towards the left of the slide, towards the west. And we'll get into that. Cominco drilled 18,000 holes on this property back in the day. They were looking for 10% plus. So this is just a list of holes where you see some of the bolded numbers. 17 meters of 10% wasn't followed up. Because of the economic context when they shut down, and they had Red Dog on the horizon, so they mined 25 years of 10% plus. They had 6% left in the ground, about 50 million tons, and they found Red Dog. I just graduated from school. Red Dog was becoming the biggest zinc mine in the world. And so they basically shut Pine Point for many reasons and went to build Red Dog. But they left out what we call these are orphan holes. So right there's a list of exploration targets. This is Mississippi Valley type ore. So any one of these intersections, just adjacent to it, you could have a blowout and the average size of these deposits can be 1 million, but they can be up to 17 million. And they can be up to 20% at smaller tonnages. So there's a whole variety. It's a phenomenal project. This is in plan view, so you see the different units on top in plan view, dipping to the west, as you see in the lower schematic section. The burgundy is dolomitization, so what's happening on the lower slide, the sections, you can see the tabular deposits, the lower horizon, the B spongy horizon, spongy, permeable. That's where the fluid flow in the Mississippi Valley type goes. The mineralizing fluids are flowing up depth, coming all the way from the Rockies, and this is where they daylight. So when you get cross-cutting structures cutting this stratigraphy, then you'll get a vertical blowout of the mineralization. And when you get those more larger vertical, you get these vertical, we call them prismatics. That's mainly what Cominco mined for 25 years was prismatics. They're higher grade, they're bigger tonnage, and that's what we're looking for. So all these little dashed ones, that's a schematic to say, we're gonna be looking now, especially we just finished $1 million gravity survey, airborne gravity. We're hunting for those prismatics at depth. They could be buried 25, 50 meters, but because it's sphalerite, galena, in limestone, it's not conductive that much, it's not magnetic, so they're tough targets to find. But with the gravity combined with the whole digital compilation that we put together over the last year, we're quite hopeful to find more. And that would bring high grade to the front end of a mine plan, which would be very beneficial. So that's our main focus. Our resources are mainly these tabulars with some prismatics. As I said, X15, which is this big pit here, and that's N204. That's X15. That was the 17 million tonner. That really made the Pine Point mine run at 10,000 tons a day for 25 years. They mined that over 15 years. And then on the N204 is a tabular out on the east extremity of the property. And this was N81. That one, when they finished production, that was 2.8 million tons around at 22% zinc. So there's quite a variety of types of deposits. When you look at 6.6 zinc, you think it's not very high grade. When you look at Bathurst, we were always mining 10 to 15. That's underground. 90% of zinc production is mined underground. So we always think we need 10 plus. But when you look at it and you convert it, and it's not one for one because it's not a big copper porphyry. We have several little pits. The cost profile is a little different, but it's about the same as 2.5% copper in shallow open pit. It's the same as 3 gram ton gold in shallow open pit. So if you look at Canadian Malartic, a much larger mine, but that's on average about, say, a gram. Well, here, this is the high grade that we're talking about in the rock, and it also makes high-grade concentrate, which you'll see. So on an NSR basis, the NSR is higher value than 90% of copper, gold, and zinc operations globally, sitting between 100 and 125 on an NSR basis. So it's good, high value margin, high margin ore. This is the other side of the profile of high-grade premium concentrate. Killian compared this to about 100, 150 different concentrates globally. And when you look at it, like I've worked at Antamina, all of these produce good cons, but they get penalized by smelters. You all know the game of smelters penalizing different concentrates for their benefit. So if you look at Red Dog and to Antamina, they're averaging up here at about 12, 13% for the major elements of silica, iron, lead, and copper. That's Pine Point at about 2% of the major deleterious elements. And on the trace metal side, the minor elements, manganese, mercury, cadmium, arsenic, they're averaging, say, 3,000 to 4,000 ppm. Pine Point's down at around 1. So this is super clean con. So if you go out and buy a con that's rich in manganese, you're going to want a little bit of Pine Point to dilute it down, pocket the penalty that you've penalized some other mine, and use this premium concentrate to dilute down the effects of others. So everybody's going to want a little bit of this. They don't want a lot of it because they can't penalize us. They tend to like to penalize the concentrates, but this is one of the cleanest ores in the market. All the infrastructure is in place. So that red line and going to the south is nice paved 2-lane highway. And it's right adjacent to the project. The electrical substation that was built for Pine Point in the day still remains. It's on site. It's next to the former site of the mill and probably where we will put ours eventually. The rail comes to Hay River. So there's a railway that connects down to Edmonton. And you're going to see there's 100 kilometers of haul roads that interconnect the central portion. This is the type of haul road, 25, 30-meter haul roads, all still in good shape. And there's about 100 kilometers. That's probably worth $100 million on its own. The rail was built to go to Hay River, so it connects us. Trail would be a potential customer, Teck, Flin Flon maybe, also CZ, but we can connect to the Asian and European markets. So that's quickly Pine Point, lots of upside, excellent project. All the communities, the government, I was just there. I just came back today. Everybody really wants to see that project go for a variety of reasons. So the wins and the sales, the resources are growing, and the scale of the project is also growing. We'll be coming out with a mineral resource estimate before the year end. We're aiming for a PEA by end of first quarter 2020, and we want to meet the opportunity of being in production at 2023. So that's our project planning is that. So it's going to go fast and it's going to create a lot of value. Bathurst, the second part of our story. So Brunswick number 12, number 6, I'm going to go a little faster here. Brunswick produced between these two mines about 150 million tons at about 12, 13% combined over the history of the mine life. Kianakon was it had a shaft, 7 levels, but for one reason or another, it was in private hands, was never looked at for 60 years. I worked at Brunswick and compiled this Brunswick belt we call the stratigraphy. Since I left, there's a new interpretation that these two connect, so we took all of that ground. We took a large position in the west, but now what we're focused on is the Brunswick belt, and that's probably the best real estate in the Bathurst camp, bar none. So we've been able to secure a large position here. Again, focused here. These are, we came out in March with a list of the top 10 targets, and we're developing more. We're developing some just south of number 12. And it's a lot of fun being back in this camp with people that I worked with 25 years ago. It's like to put the band back together again. It's great. Last year, the resource we put out, again, it adds up to about close to 5.8 million tons, just over. That was basically going in, drilling historical deposits, same as in Pine Point. A lot of exploration last year as well, and now we're continuing to grow through exploration, but you'll see that there's room to grow in the deposits. This is that Kianakon zone that was on the shelf for 60 years. There's some intersections down here that equate to, trying to see sideways here, but this is ore width, over a 75-meter width, but there's, where is it? Zinc equivalent. 10%, there's about 15 meters down here. That's 500 meters. But we couldn't model it because the drilling's too sparse. So we could double the size of this deposit with more drilling. And there's lots of room open. There's also this parallel copper zone with intercepts that are in the 2-3% range over about 6 meters. But these are 400 meters apart. So there's potential for a copper zone as well. So this project has room to grow. Right now, we're stepping outside of all this resource envelope, trying to find more deposits. So then we can always come back to this and drill more and develop more value here as well. There it is just in section. And so, yeah, that intersection there is 13 meters at 10%. So the next milestones, we're going to continue on brownfield exploration in both camps. We're underway at Pine Point drilling. We're also, as we've been announcing in our press releases, relogging some of the 18,000, or there's 10,000 holes that are in this core graveyard. And in the day, Caminco was looking for 10%. So there's lots of intersections in there that we're pulling this core, reassaying it, and we're finding mineralization that's high grade today. So we're attacking it on two fronts, and the core graveyard is a very cost-effective way to get results. The whole upside right now is to expand that resource from 38. Our objective is 50, and I think there's room to grow. If you put what was mined with a potential of, this is a 100 million ton system. What was mined by Caminco in the day, it's a world-class system, and there's a lot of untapped potential remaining. So we look forward to further increasing the resource. There's a lot of the drilling that we couldn't include in last year's resource, so the 714 holes will convert two of the main zones to indicated. The east zone pretty well 100%, although it's growing from the exploration drilling we're doing right now. And in the central zone, I'd say we're 30 to 50% done drilling it to indicated. And we've got it all planned out, what it would take to drill it all to indicated. And as I mentioned, PEA for before mid next year. Bathurst, same thing, drilling to expand the resources, brownfield exploration, and we're doing quite a bit of exploration also in Quebec, more grassroots, looking for a Broken Hill type model. Bob Wares, our chairman, has been very busy at that all year, and coming up with some pretty interesting results. So there's lots of blue sky just in that portfolio alone. But between Pine Point, Bathurst, and Quebec, we're attacking it on three different fronts. Creating value in the zinc space, and I just want to skip forward here. I just came back from the territories. There's a new government elected. But what you see here is, in the old days, 300,000 tons always critical level. 600,000 tons was considered oversupply in the market. When China came in and started building a Canada a year of infrastructure back between 2002 and 10, they drained the zinc supply. This is the same chart for many of the base metals. So when that happened back in 2007, before the great financial crisis is here, the price spiked to $2. Then a lot of mines started producing to match. It was no longer, when the cycle was 300 to 600, the price was, was 30 to 50 cents. But now since that price hike, it is rarely below 80 cents. And now I think more the long-term price and forecasted to be is 1 to 115, say, for years to come. But after the financial crisis and depleting the supply, a lot of mines were, like China slowed down in their demand, but a lot of mines were producing much more. We got up to a 1.5 million ton inventory. Remember, for decades prior to this, the highest was 600. So the market was oversaturated, and you can see the price really couldn't get off 80 cents to a buck. Then it went down in 2016, but the supply was really coming down. Now it's changed. It changed back. We started the company right about here. We saw supply going down, not many projects in the pipeline, and the price was going up. And then this was the turnaround when Trump started his trade wars. So we've heard of that. And this is just till January. So it's been around 1 to 120 since January. But look at the metal inventory. It's still there or lower. It's still down at 5 days or less. So half of the level you needed for critical supply. So as soon as plus the first slide I showed you at the beginning showing that there's depleting production of concentrate over the next 3 years, there's going to be a 35% drop in North America. Globally is the same thing. As soon as you uptick on infrastructure demand, on a low metal inventory and a dry pipeline for zinc, you're going to see a positive reaction in the price and our story. Thank you very much.